Here with this week's hottest stories in the investment world, this is Zach's Friday Finish Line.
Hello and welcome to the Zach's Friday Finish Line. I'm Ryan McQueeney. I'm an associate stock strategist here at Zach's and joined by one of our editors, Maddy Johnson.
Hello, today is Friday, September 21st, and we are here to recap this week's biggest stories from the investment and financial world. Of course, there was a lot of news out of Washington, D.C. as the standoff between Democrats and Republicans over sexual assault allegations facing Supreme Court nominee Brett Kavanaugh definitely ratcheted up throughout the course of the week.
Yeah, definitely getting feisty in the nation's capital. On Wall Street, investors mulled over a potential thaw in the ongoing trade war between the U.S. and China en route to a decent week of gains, all while keeping a very close eye on next week's Fed meeting.
So we'll have to wait and see what the central bank has to say about the pace of rate hikes and inflation in a few days. But first, we'll check in with some major stories from the trailing week, including a recap of how our favorite streaming services performed at the Emmys.
Yeah, so we just had to touch we had to jump right into this story. The Emmys were Monday night. Netflix was actually the heaviest nominated team there. I don't know if you want to call them like if you would call it like a production company or what. They
basically are
channel.
Yeah, and I will say, sorry to jump in. So they're usually on a Sunday night.
Yeah,
and they're rotated.
That's what I thought.
Yeah, they're rotated between. So the Emmys are rotated between the four major major networks,
the TV channels.
But because NBC has, correct me if I'm wrong, like the rights to Sunday Night Football.
Yes. They had to be on Monday.
And
they went up against Monday Night Football.
Yes. And that is probably one of the reasons, one of the many reasons I think that they had like very low ratings this year. And it was like a culmination of like lackluster host, in my humble opinion.
Yeah.
And just like the Emmys, it's like doesn't really have like the buzz of the Oscars.
Yeah.
And it's like, it's on a Monday night, and it's like
it's
definitely like
show.
a 3-hour award show too. There's a lot of categories.
Yeah. I heard that they didn't really, I wasn't watching Monday Night Football. The Bears played on Monday Night Football this week. So like, I can't watch two things at once. So my allegiances were in the NFL this week, but I heard that they didn't, as many categories as there were, they didn't even really like show that many awards on TV. Like a lot were like over commercial breaks and stuff. And
because there's a ton
by the way,
Emmy
these people
categories.
Yeah, I mean, okay, so Netflix had the most with 112 nominations.
Yes.
So that ended HBO's 17-year streak
crazy.
as the most nominated channel or producer, however you want to phrase it. HBO was in second this year with 108 nominations. Standard TV shows or TV channels held their own, did a pretty good job. NBC had 78 nominations, FX had 50, and CBS had 34. And then if you get into the streaming services, Amazon was in 8th overall in terms of nominations with 22. And that was right behind fellow streaming player Hulu's 27 nominations. So Hulu definitely punching its weight there. I like that. Netflix shares were actually up in the wake of the Emmys on Tuesday. So that was an interesting trend to watch. It was tied for first in overall wins as well. 23 victories. That tied HBO's total number of wins. So I guess, the tiebreaker would be nominations. So Netflix, king of the Emmys, if you want to call it that. And then Amazon took home a few wins for The Marvelous Mrs. Maisel.
Yeah, they were definitely the big winner.
Yeah, and it also saw a nice rally, was up as much as 2.5% the following day, by mid-morning the following day. So investors excited about the Emmy Awards. I don't think these necessarily have a ton of financial impact, but I think they kind of underscore the fact that these streaming services are trying to make quality TV shows. That's what Reed Hastings always tells us. We're trying to make good content that our viewers like.
Well, like it's also, and then you can also see like Netflix's like $8 billion like commitment to like producing content is like kind of paying off.
Yeah. You want triple digit Emmy nominations, $8 billion worth of content. Yeah. I guess cast a wide enough net and like you're going to catch a few fish in there. So I guess that's their whole strategy.
Yeah.
So that's an interesting trend to watch, and it's been so quick for Netflix to go from we have House of Cards to we have dozens and dozens and dozens of shows and 113 Emmy nominations, dethroning HBO. So
Yeah. Well, yes. And then, the final season of House of Cards is coming out in November.
yes,
Very excited about that.
yeah,
All the way.
missing a lead role.
Well, he can be
rightfully so.
rightfully so. Robin Wright all the way. And then HBO final season of Game of Thrones.
Yeah.
Basically like a guaranteed outstanding drama win.
Yeah, I was gonna say. So that means we're kind of like entering into this next what's gonna be the next phase of peak TV shows that these schools
and like the final season of Veep. I don't know if you watched that show. Great show. That's also premiering next year as well.
Yeah.
So I mean, there's so many quality TV shows out there, so it's really hard to watch them all.
Yeah,
But
that's true. But I think you make a good point with those three shows wrapping up. That we are kind of like about to enter into a new phase of the peak TV cycle.
More players.
We've talked about peak TV on the show before, but it's like, going all the way back to like The Wire and Sopranos and stuff like this when TV became
HBO really set the
good.
stage for it. So, I mean, the 17-year streak, it's not really surprising.
Yeah, no, not at all. But definitely interesting to see the technology companies come in and stake their claim at a few nominations and wins.
And we'll have to see how Netflix and, not to go on about this, but how Netflix and Amazon do in the Oscar race. It's coming up. Well, it's heating up, I should say. I love it. Very big into it.
It's award season, I guess, almost, right?
Really. It really never ends, but it really
yeah.
starts like now until February. So,
yeah.
But anyways, moving on to a
criminal investigation.
Criminal investigation with a very popular car company.
You've heard of them, yes.
I've heard of them. They've been in the news a lot. Tesla. So there's been another interesting development in the ongoing saga of this electric car company. So this started back when Elon Musk decided to start tweeting about his plans to take the company private. We all remember that.
On an afternoon.
Random afternoon. It seemed random.
Yeah.
I don't know if he thought it was random.
Yeah.
So those tweets, which eventually led to blog posts, the revelation that the funding in mind was the Saudi government, and the ultimate conclusion to stay public, are now causing Tesla serious regulatory headaches. In fact, according to two sources cited in a report from Bloomberg, the Justice Department is investigating both Tesla and Musk.
Yes.
Yikes.
A little probe, if you will.
So this probe is reportedly running alongside a separate civil inquiry launched by the SEC.
So two probes.
Yes. One has turned into two.
Reportedly.
Allegedly.
Uh-huh.
Tesla would later confirm that this has been contacted by the Justice Department, explaining that it received a voluntary request for documents from the DOJ and has cooperated in the process thus far.
So not even really reportedly then, if they confirmed it.
Yeah. It's just
a whole mess and a half.
really has like snowballed. I feel like a little snowball has turned into like a big one, and then it has turned into an avalanche, and then it's just like rushing down the mountain towards Tesla's headquarters.
I like the visual element of that, definitely.
And Elon Musk isn't really paying attention because he's so high.
Have we? I don't think we've talked about that on the show. Oh man, it's been an interesting
Just
few
because like
weeks
there's
to
so
be
many
Elon Musk and friends.
There's so many headlines like literally every day.
Well, this is what happens when you're supposed to be investing in a company because of its leadership, and that's like one of the key points of the bull case for the company is that their CEO is this visionary, and then he has a very public, let's call it a flame out, where he makes a bunch of poor decisions in the public light and becomes kind of has that public rhetoric shift against him, then it becomes a mess. Like that's you asked for it.
And I will say, like, as much as I personally, like, in my opinion, like, I don't have like the highest regard for Elon Musk.
Yeah.
I do think that like he is suffering from mental health issues, and this is clearly speculation, but I feel like people need to be stepping in and talking to him and like figuring out what to do for the health of the public for a company that is publicly traded.
Yeah.
And that makes cars that are really like groundbreaking.
Yeah. Good quality cars.
Good quality American-made cars,
Yes.
right?
U.S. car company.
But if they're not going to do anything, then that raises a whole other slew of questions about the quality of the board of directors.
Yeah.
So anyways, Tesla shares did fall about 7% on Tuesday afternoon after the report just emerged. But investors have already kind of shrugged their shoulders at the news as the stock had regained those losses by Thursday afternoon.
It was just not a big deal. We don't really care.
Yeah, as long as I feel like production goals are met.
Yeah.
At this point.
Yeah, definitely. So, I mean, I'm sure we'll come back to this story next week. I was just gonna say, keep your eyes on this one moving forward. We'll keep our eyes on all the latest developments. And you're right. I think there's rumblings. They're off in the distance still, but there's rumblings of should they bring a new person in? Maybe a co-CEO or maybe a new advisor or something. And I think those rumblings are gonna start getting louder if the more and more layers this story adds to it. And a DOJ investigation, as serious as it is, or if it's a voluntary thing or whatever, never a good thing to hear about.
No.
So moving into kind of a good transition from Elon Musk smoking weed on the Joe Rogan podcast to us talking about the marijuana stocks. Just absolute insanity this week, really into last week as well. Marijuana stocks, the Canadian pure plays that have come down and listed on U.S. exchanges like Tilray, which is ticker TLRY, Canopy Growth, CGC, and Kronos Group, which is CRON. You've probably heard of these by now with the madness that's happened. I'm calling it reefer madness here.
Reefer madness.
Tilray has been the leader of the pack over the last few weeks, and just a crazy explosion this week in the wake of the company's announcement that it has actually received approval from the DEA to import marijuana to the U.S. for medical research. So this Canadian company is going to be working with the University of California, San Diego Center for Medical Cannabis Research, say that 5 times fast, and it's going to be studying together the efficacy of marijuana for a specific neurological disorder. So that's big news. It's obviously just for medical research, and it's this one study, but it kind of shows we have our eyes on international expansion. This is kind of, if you're talking to these speculative investors, this is kind of the long-term goal for these companies is you start in Canada, you have unlimited international potential as the regulatory picture shifts in these different markets. So the CEO of Tilray, Brendan Kennedy, was on CNBC this week. He was talking to Jim Cramer, and he said a couple interesting things, notably that he thinks pharmaceutical companies should consider working with cannabis producers as a, quote, hedge against their industry. Elaborating a bit more, he was basically saying medical cannabis reduces the need for prescription painkillers. People will choose this over these drugs that these big pharmaceutical companies are making. And so if you're a smart investor in pharmaceutical companies or executive at a pharmaceutical company, you should be looking for your company to start working directly with cannabis producers as a hedge against your business. Kind of like the Saudis getting into electric cars as a hedge against their oil business. It's very similar. So the next big event here is Canadian legalization. So that bill goes into effect on October 17th. Passed in June after a year in their house of whatever they call it up there.
Parliament.
Yes. It was a big campaign promise for Mr. Justin Trudeau. They got it done after a while, and then they needed time after passing it to give the individual provinces and territories time to establish their own rules. I think the basic frameworks is personal producers can have 4 plants in their houses. You have to be 18 at least. Provinces can choose to make that age higher. This, that, and the other thing.
Okay.
So that's October 17th. And I wonder if some of this is just kind of piling into the tickers that are available ahead of the recreational legalization, because then that's also an opportunity to expand in their own market without even breaking in internationally. But it's been crazy nuts. Tilray now has a market cap in excess of $16 billion. It has surged from under $50 a share to over $170 in the past month alone. And on Wednesday, the stock briefly traded as high as $300 for a half a second. And Wednesday was nuts. They had to halt it like 5 times because it was just going absolutely bananas. It's briefly touched $300, which is just insanity. It's Reefer madness. I'm sticking to that as a phrase. And I don't see it stopping anytime soon, as people, again, just kind of pile into the stocks that they can pile into here. Speaking of this is going to be a hard transition. This isn't as smooth as the last one. But speaking of craziness and stocks that people go nuts for, we had the latest earnings report from Micron to finish the week here.
So I don't know if Micron is like right at the end of the last earnings season or like the beginning of the next one.
Great point.
Because next week is Nike, right?
Yeah, it's heating up. I think we got over the middle of the cold period so now I think they're really early.
Oh yeah, Micron. Yeah. Okay, so Thursday afternoon, Micron reported adjusting earnings per share of $3.53, and this beat the Zacks consensus of $3.32. And improved nearly 75% year over year. Micron's revenues in the reported quarter climbed around 38%, also on a year over year basis, to $8.44 billion and came ahead of the Zacks consensus of $8.25 billion. On the DRAM side, total revenue, not the wrapper, was up 47% from last year. Micron saw mid to a upper single-digit percentage rise in shipment quantities, while average selling price remained flat sequentially. Elsewhere, NAND average selling price declined in the mid-teens percentage range. So management did say they believe growing demand for new camera and digital features utilizing machine learning, this will drive DRAM and NAND content in mobile devices next year, 2019. Also in terms of outlook, Micron was selected as NVIDIA's lead supplier for DRAM chips for its new gaming GPUs. So the company believes growth there will be a tailwind in 2019. However, the company expects revenue in the current quarter to be in the range of $7.9 to $8.3 billion. This is soft compared to the current Zacks consensus estimate of $8.35 billion. The company also called for earnings of $2.88 per share to $3.02 per share, $3.02 per share. Excuse me. This was upbeat compared to our early consensus estimate. Yeah. Micron also announced a $10 billion share buyback. Mixed results here, certainly, and the stock was down about 4% at the open on Friday. Yeah.
I think, if this was 2 years ago, maybe, and we're seeing a chip stock see earnings growth is 75%, earnings guidance with the low end of that range is where our Zacks consensus estimate was at, so it's an upbeat. Revenue guidance a little bit soft, but overall, citing specific things as tailwinds, decent earnings guidance, huge earnings beat and growth. This was 2 years ago. This would be like amazing. This is exactly what we want to see. But now, as everyone's trying to call the end of this semiconductor super cycle,
the whole chip stock sector is definitely facing
that little bit of softness in the revenue guidance is enough to be like, well, this is a disaster. We told you, I told you it was over. Yeah. So we'll see. I think, for me, the interesting takeaway is, are there going to be enough of these secular growth drivers to be able to blow past these cyclical concerns that we're alluding to? Micron doing their best to say, yes, look, we're working with NVIDIA. Yes, we have all these new potential in smartphones with the new camera features. So far, investors aren't buying it, and the stock is really taking a beating. But
sounds like retailers like a year ago.
Yeah, so we'll see if the story plays out similarly there. But as we head into earnings season, that's going to be the storyline with every semiconductor stock, especially these big ones. So we'll see if they can do anything really. I see a lot of volatility ahead, but I'm not Nostradamus. So that's going to do it for us this week. We had Micron, marijuana stocks going crazy, Tesla, Netflix, a standard episode for us, really.
Absolutely.
As a reminder, if you feel that we missed something or if you want us to cover a different story, shoot us an email at podcast@zax.com. Reminder, you can also check out all of our other exclusive audio content at zax.com/podcasts. Please subscribe and leave us a rating on Apple Podcasts if you enjoyed the show. We're also available on Spotify, Stitcher, SoundCloud, basically anywhere you can find a podcast, we are there. Thank you so much for joining us today, and we will see you next time on Zach's Friday Finish Line.